it really is a team sport. I always like to tell most of my clients that are starting to be in that painful position. When I say it's painful when they're writing those checks, like, wow, I had to write that big of a check to the IRS. Well, if you played baseball and you only had a pitcher and a catcher, you probably wouldn't win a lot of games. As you want to have first baseman and maybe a shortstop and a right fielder, and of course, as you're growing your business and your revenue grows, your profits grow, well, then it's like, wait a minute, we need some more positions here because we're not covering all our bases.
Welcome to Biz Help for You, the show that saves you the expensive learning curve by providing advice from industry experts in every facet of the entrepreneurial journey. Too many small businesses collapse. According to the U.S. Census Bureau, 20% fail within their first year, and less than 35% make it to their 10th anniversary. The goal of this podcast is to change that statistic. So if you're interested in learning more to be a successful entrepreneur, tune in today.
Now, let me tell you a little bit about my guest today. Mark Myers, a distinguished Marine veteran with over 8 years of service, has received the Distinguished Medal Award and Robert A. Met Award for Outstanding Leadership. He is the founder of TaxWise Partners, a financial services company that for over 15 years has assisted thousands of business owners in permanently reducing their tax bills by an average of 50%. Without replacing their CPAs or financial investment advisors. Despite working with experienced CPAs or accounting firms, over 90% of America's successful small and medium-sized businesses significantly overpay in taxes. TaxWise Partners has helped thousands of companies increase profits and permanently reduce their annual tax bills, enabling them to scale faster and accelerate their wealth. You can learn valuable strategies for tax reduction and financial optimization from Mark's expertise. So Mark, welcome to the show.
Candy, thanks so much. What an amazing introduction. It made me think, who's that person you're talking about? They sound pretty cool.
Well, I did give a little bit of information, but I would love for you to share a little bit more about, how did you even begin helping entrepreneurs with reducing their tax bills?
Yeah, that's a very good question. And it's an interesting one. It's a fun conversation because anyone that knew me 20 plus years ago would say, hey, aren't you the Mark that used to run high-end health clubs? I used to manage, very high-end health clubs in New York City and Los Angeles. And I kind of cut my teeth. I got my undergraduate degree in exercise physiology. I got my master's degree in sports management. So people are like, well, how in the world are you a tax savings architect or a tax strategist? Well, in my experience running these club companies, they were really high, very high end. So it wasn't like your average everyday 24-hour fitness. I really understood how to run a store, as an owner operator. And I was paid out as, my payment was really, salary plus bonuses. And the bonuses are always around margins, EBITDA margins. How profitable were you? Could you manage expenses? Did you drive revenue? And of course, what was our margin? So understanding how to drive revenue, reduce expenses, increase margin really helped me to kind of think like a business owner, even though I was running someone else's business. So, 2006, 2007, I said, I can do this. I can move away from this industry and do what I really like to do, which is solve problems. And I can be a consultant to business owners, right? So I really said, okay, I'm going to take this plunge. I'm going to start doing more sophisticated insurance, right? Buy, sell, premium finance, key man, those types of, and I'm going to work with business owners because I speak their language, right? I've been running businesses for other companies for a long time, so I understand. So that's really where it started. And of course, in the insurance space, you start learning more about tax efficiency because, some of the tax codes in insurance are the best tax savings vehicles in the world, and they're very secure. They've been around for a long time. So then that just kind of started opening doors. So what else can you do for tax efficiency? And what I found there was a huge opportunity to fit into this place that, is a really void in the market. There's 75,000 pages of tax code. There's a lot of coupons in there. I call them coupons, the tax savings. The IRS doesn't send out a flyer every week and say, Candy, here's your coupons. Go ahead and clip them. You have to have someone looking for them. And unfortunately, CPAs and enrolled agents don't generally have the time. They have so much on their plate with just keeping up with the recording and tracking and prepping and filing of taxes. They don't have time to do all this extra due diligence. And quite frankly, it's not their wheelhouse. They're not focused on the legal element. They're focused on the accounting element. And of course, when it comes to financial advisors, they have so much regulation on what they can offer their clients and what they can't. They can't do what I do. So I said, let me work with financial advisors and CPAs. They'll be my clients and they'll introduce me to the business owners and the high income earners. So here we are today, many, many years later. And it's just been a blessing because, we just solve problems. I'm not stepping on anybody's toes. I'm not telling the CPA, I'm not telling the client, hey, you don't need your CPA. We'll do your tax prep and filing, and we'll do your bookkeeping and some accounting for you. We've got a CFO. No, we don't do any of that. We don't step on their toes. And we also, when we save them significantly in tax, we don't also say, oh, by the way, you need to invest in this and this and this. That's for our registered investment advisors that are our referral partners. So we really kind of thread the needle. And we step in there as a tax-wise partner, right? We're a strategic partner to just add value. We don't want to replace anybody. We just want to add value because we have additional layers of bandwidth that we can add to the situation that, generally speaking, the practitioners that they're working with just haven't integrated that yet. And it's fairly common that they haven't.
Right. And it just seems like the tax law changes every year. And it seems like sometimes the start date to start filing gets pushed back. It's supposed to be January. Now it's getting into February. And then by the time the IRS starts approving, like you could do tax returns, then the CPAs start getting busy, right? So they don't have time to really investigate. You might hear, these certain things that have passed, which are like the main, most important that people think of. But like you said, there's so many different things that are in the tax law. It has to be someone like you, right, that has the time and can really dig in and learn what has changed and how does it apply, to businesses. So I'm sure that they appreciate having you as an asset on their team as well.
Yeah, Candy, thanks so much. You really stated it quite eloquently. I mean, it really is a team sport. I always like to tell most of my clients that are starting to be in that painful position. When I say it's painful when they're writing those checks, like, wow, I had to write that big of a check to the IRS. Well, if you played baseball and you only had a pitcher and a catcher, you probably wouldn't win a lot of games. As you want to have first baseman and maybe a shortstop and a right fielder, and of course, as you're growing your business and your revenue grows, your profits grow. Well, then it's like, wait a minute, we need some more positions here because we're not covering all our bases. And you think about business owners, like they're focusing on how do we grow our revenues and what are our key profit centers? Well, most of them don't realize that tax savings is a key profit center, right? All the big corporations, if their shareholders were if they paid a huge amount of taxes, their shareholders would go crazy. So they have whole departments, that the whole entire department for Microsoft, all they do with attorneys and multiple accountants and business strategists, all they do is focus on how Microsoft can pay less tax. But Microsoft isn't Bill Gates, you can do the same things. Like the rule is not like only Bill Gates can do it. But a lot of times certain things that a large company like Microsoft might do may not be applicable to a medium or small sized business, but there are a lot of things that actually are. And there's a lot of groups out there that said, we're going to focus on utilizing this tax code the way that other institutions that are larger have used it, but we're going to make sure we scale it down and we're going to focus on the little guy, and make sure they can benefit from the same thing, right? Because again, the tax code is not, it doesn't discriminate. It just is what it is. You just have to use it efficiently.
Perfect. Well, so if there are entrepreneurs who are just going to be starting their businesses, what are some of the best strategies to set them up for financial success from the very first day that they begin their business?
Great question. And for the new business owners, the first thing I like to say is don't think you have to have everything in order, like the right entity, everything like like I'm going to make all this money. So you spend all this money on prepping your business, and all of a sudden you're like, well, where's my revenue? Where are my leads? Focus on leads and revenue first, but pick your initial entity. And I think that an entity can be a sole proprietor to start, right? The easiest. Or you can go ahead and get a little bit more asset protection than that and get an LLC. Even if it's a single member, disregarded, at least you have some asset protection. Then you can grow from there, because a lot of the clients I'm speaking with, sometimes they're sole proprietors. We need to get them into an LLC, or maybe they're an LLC. And we say, hey, it actually makes more sense for you to do a subchapter S election. We could actually do some additional tax benefits, and then of course, as they grow their revenues, we're looking at other efficiencies. But I think the first thing is focus on lead generation, focus on driving revenue. Either set up a sole proprietorship with a DBA, or set up an LLC, just for asset protection. And then you can start, make sure you have, I would say the first thing is make sure you're keeping good books, because if you're not measuring your success, then you can't see if you're winning or losing. Like if you know that this is what I'm spending each and every month because I have a good bookkeeper, or I'm being the good bookkeeper right now because I'm wearing a lot of hats, I know exactly where I'm gaining and losing. And that way you can push and pull the lever. So basic entity and a bookkeeper probably would be the best place to start.
Right. Well, and just like you were talking about having that team, like I do try to tell clients as well, like make sure you have those advisors that you can ask, and make sure you understand their perspective on the advice they're giving you too, because just talking about the entities too, yes, you could be an LLC, you could be a sole proprietor, you could be an S corporation, but understanding the pros and cons of each is also important. And like your CPA is probably going to tell you, for tax savings, maybe you don't want to be an entity yet, but your attorney is going to say, well, for protection, you probably want to have it. Yes, you'll pay more, having a minimum tax a lot of times in states, so I think understanding that aspect of it too is really important. So I'm glad you even mentioned earlier about having that team, because if you're trying to make this decision on your own, or you only ask one person, you might make a decision that you didn't have all the information, and you might have made a different one, right?
That's exactly right. Yep. It's going into it with eyes wide open and just making the best decisions at that appropriate time, right? Don't get ahead of yourself, but also don't drag your feet too, because I've talked to business owners that, wow, you're at that level of revenue, and this is where you haven't put a lot of energy into your structuring and tax efficiency, et cetera. But that's a good problem. That means they've been focusing a lot on blocking and tackling, and they have this big revenue that they've grown. It's like, okay, now we can fix it. But, I'm surprised you waited so long.
Right. Well, I think a lot of times people think, well, if I don't want to pay a lot of taxes, I just have to spend a lot of money and have a little bit of profit left over. And of course, if I have a bigger profit, I'm going to pay more in tax. So do you have any advice on how we can save money on our taxes without sacrificing the profits?
Yes. I love that question, Candy. It doesn't make sense to spend $1 to save. Say you're in Florida, you don't even have or Washington or Nevada or, Tennessee, you don't even have a state income tax, but you're looking at higher tax brackets because you're doing well. You're at the 32%, the 35%, the 37% federal bracket. So why in the world would you spend $1 to save 32 cents or 35 cents? Unless you needed what you're spending the money on, but don't justify it like, oh, I really do need that 6,000 pound, whatever vehicle, but you really don't. But you can justify it. But so that's where I'd say don't fall in the trap. Don't fall in the spend $1 to save 37 to 50 cent trap. Let's look for other ways to be efficient in tax savings. And this is where there's 3 tiers of tax savings. There's tier 1, tier 2, tier 3. At least this is my mantra. Someone else might say it differently. But tier 1 is what most people do, right? Let's defer. Let's put a little IRA together, or a SEP IRA, or a 401k, or a super K, or some type of a defined benefits plan, or cash balance, depending on if they get bigger and bigger, so they can tuck more away. Well, okay, you're deferring. It's not the best strategy, but it's better than nothing, right? At least you're taking money that you don't need to spend right now on your lifestyle. You're not paying taxes on it, so you can therefore reinvest it. And in the future, hopefully you'll have a lower tax bracket, but that's a controversial conversation. But at the end of the day, it's better than nothing. And then option two is that spending $1 to save 50 cents. But that's strategic. If you know that when you spend that money on that cog or that software or whatever it is, you know that it's going to produce a huge ROI for you. Okay, well, that makes sense. But let's talk about tier three, which is, how about if we give you expenses for your business that can essentially become tax-free profit for you, the business owner? That's pretty interesting. Or let's talk about structuring your entity in a way that, hey, maybe we can reduce your employment tax for a certain amount of dollars. Or how about you have kids? What if they worked for you and did some things and we paid the kids, and we have a certain amount per year that you can pay the kids, and there's no tax to them and there's no tax to obviously the business because it's a deduction. And depending on the type of business, we might even be able to avoid the employment tax. So we're always looking at these types of things. But I would say when you start getting into the really, really creative and advanced strategies, now we're looking at, well, how can you acquire these tax credits? Right? There's tax credits that you can acquire, and you can utilize them against all types of income if you unlock them. Or maybe we can get you deductions. But what if we could get you $1 deduction for 25 cents? Well, that makes a lot of sense, particularly if you have a $1 asset that you might subsequently donate. Wow, if you're donating a dollar, an asset worth $1, right? Because you can take the fair market value of a tangible asset you donate. Well, in California, the highest tax brackets would, on $1 donation or a donation to a charity that's worth $1, that's a 50-cent tax savings, the highest tax brackets. Well, if you bought that 50-cent tax savings for 25 cents, that's a nice return. That's about 100% return on your money, just because you're charitable and you're smart with how you're being charitable. So tax credits, leverage deductions or discounts on deductions, entity structuring, and there's all kinds of things. Like if you're selling your business or you're selling a highly appreciated asset, well, maybe you don't want to sell it in your name, because if you take assignment of income or constructive receipt, the IRS is like, give us the long-term capital gains. But if you shift that asset into another entity and now the other entity sells it, well, now you haven't taken the money, so there's no tax to you, and the entity has a significantly different tax outcome. So now we can have a more efficient way to take the dollars from the sale and then reinvest that capital and then pay taxes over time at lower brackets, or maybe even eliminate the tax depending on how we're structuring that. So there's a lot of things you can do. It's just a metric of what's the fact pattern, right? Where are you right now, and what can we do with what your situation is right now?
Well, and there's so much in that whole thing too. Like I said, even knowing what those tax credits are, and like I said, the CPAs may not know. So if someone is listening to this and saying, well, maybe there are some deductions I didn't take, do they go to the CPA and the CPA goes to you? Do they reach out to you and you help them, go through their tax return and find what was missed? Like, what does that process look like?
Yeah, I would say, for the accounting things, you're always leaning on your CPA for, hey, did I miss any deductions? Did I miss any current benefits like qualified business interest deduction, or things that are like around right now in the Tax Cuts and Jobs Loss Act. But outside of that, it would be, your CPA, if they're already working with TaxWise partners, they're going to hopefully identify, hey, there's some extra layers that we see here. Let's bring in our strategic partners to solve some of these problems. So they won't have to say anything. But if their CPA is not, which I would say probably 8 out of 10 or 9 out of 10 CPAs are not partnered with an organization like us, even if it's not us, they're not partnered with an organization like us because, one, there's not a lot of organizations like us. 2, CPAs have their head down doing what they're doing, and somebody has to get their attention. So that being said, if they feel like, hey, I think I've exhausted all my resources with my current CPA, just reach out to us directly. We will work with that person. We'll do we'll basically do a complimentary call just to kind of identify what the opportunities are. And we're not looking to replace their CPA. We'll be happy to have a conversation with their CPA. And then we kind of move forward from that point forward. And we also have a lot of CPAs across the nation, different states, because we've done business, that they already understand what we do and they already have clients that utilize what we do. So sometimes our people we talk to, they're ready for a new CPA. Not that we're ever trying to move them away from their trusted professional, but they've already had the idea, hey, maybe it's not the right person. Well, okay, well, we'll have you we'll introduce you to 2 or 3 options. You choose who you want, but good news is all of them know exactly what we're recommending, and we don't have to kind of go through a whole process to share with them how to file and all the rules, and which I'm happy to do that, right? Because whenever I make a new relationship with a CPA, that opens the door to possibly helping new people. But
Right.
it just depends on what they need. Sometimes it's helping their current CPA, and we put it all together, which is preferable. But sometimes it's saying, hey, we've got some other CPAs that you can speak to if for some reason your current situation is not the most ideal.
Mm-hmm. So let's shift a little bit away from talking about just finding those tax credits to talking about cash flow, right? So a lot of business owners never even pay attention to that. They just know oh, I have money in the bank, or I need to get more money, but they don't really pay attention to all of that. And they don't always understand the difference between profit, which might show on their, income, or the profit and loss report, income statement, and what they have left in the bank. So can you really talk about why it's important to kind of watch that cash flow and accurately track that, and using that for your proper planning for the future?
Yes. And this is where, Candy, having a bookkeeper or ultimately doing the bookkeeping in a very efficient way is so important, because you need to know what your income is daily. You need to know what your projected income is. You need to know what your accounts receivable are, for essentially if you're a net 30 business. Or so what do we have in the pipeline, right? And that's a sales thing. How many leads do we have that are about to close? How many people are closing that have not paid yet? How many people have been closed that are on a net 30 and they're supposed to be paying or whatever? So now you know where your money, how much money you have now, how much money you're expecting in the next 30 days. And also on the other side, what's your outgoing? What do you need to buy? Do you have any capital investments that you need to make, which are larger investments that you're going to have to depreciate over time? What are the immediate expenses? Do you have any payroll you need to cover? But if you don't have that tracked on a daily, weekly basis, where you can easily look at it in a snapshot, so you can really look at the high level, you're going to I'm not saying you're not going to be successful. It's just that there's going to be some holes in your bucket.
Right.
And it may take you a little longer to realize the profits that you want, because you're not addressing the hole in that bucket, right? Or the inefficiency in your acquisition of the revenue. And here's the whole other side that I talk about, Candy. It's once you start making good money, well, guess what your CPA is doing? Oh, by the way, we need to make sure you're making those quarterly estimated payments.
Right.
So now if you're just stroking that check every quarter, that could be a big problem, because if we're talking to them in quarter 1, quarter 2, we say, here's the things that you can do that will significantly reduce your tax. And they say, well, what do I do to find the money because we do have to purchase certain things, but they're leveraged things. Okay, well, let's just take that quarterly estimated tax payment and shift it in another direction. And by doing so, maybe that you would have had to pay, I don't know, just make up a number, $20,000 in estimated tax. And now we're taking that and holding it. We're sending $10,000 to the solution, but it's saving them $20,000. So now they have $10,000 more that quarter in their account to put into their business for growth, because they know that they don't have to pay the tax, because we just saved them $20,000. So don't make that $20,000 estimated tax payment. But it did cost you $10,000 to save $20,000. That's not always the case. Sometimes it costs less, or sometimes it's more. But hey, their option would have been to say goodbye to the $20,000 as an estimated payment. Now we're saying, don't send it. You don't owe it. It's going to cost you $10,000 over here to save the $20,000. Guess what? Now you got more cash flow. You got $10,000 more that you didn't have to send to the IRS, even after your expenses on this strategy. How are you going to put that into your business to create a huge multiple, right? Because most of the time they're so good at their business that if they just had more capital to put in, to infuse in their business, they can get huge ROIs. They're getting 50, 60, 70% ROIs but they need the working capital. So sometimes it's the tax savings that can help them with the working capital, So
right. Well, and sometimes the business owner doesn't understand that the taxes that you pay are not deductible, right? So the IRS doesn't say, oh, you paid us $20,000 or $50,000 and you get to deduct it, right? They're like, well, that's just the tax you pay on your income, right? So I think a lot of times business owners really don't understand that and then get frustrated because they don't have the cash and now it looks like they're profitable. So then their taxes are higher, right? It's like this vicious cycle, right?
It's exactly right. It doesn't work. Income tax doesn't work like property tax. You don't get deductions on
Mhm.
income tax, but you do get to write those checks quite frequently, and you
Right.
could be overpaying them if you're not slowing down enough to say, am I treating my tax burden as a profit center? Because if you think
Mhm.
about it, a business owner is always saying, well, how can I reduce expenses? How can I reduce expenses? How can I make more money? Like drive revenue to reduce expenses. Don't overlook one of the biggest expenses that you have as a business owner, which is your tax liability. And if you're not spending enough time figuring out how to reduce that big expense, then you're missing a huge profit center.
Mhm. Mhm. Right. Yep, which makes it all the more important for people to talk to someone about like what are we missing, because we probably are paying more than we should on taxes. And so it's important, even though as entrepreneurs, I know we wear like so many hats, we're always busy, there's so many things to do, but this is one of those reasons why you want to find some time, right, to talk to a professional and find out what you're missing, right? So you can get that extra cash in your business.
Absolutely, Candy. I couldn't have said it better myself.
Thanks. Well, I know we're coming close to the end of the time that we have together, so I'd love to ask you first if you have an offer that you would like to share with our listeners, and then also if people are interested, how can they reach you?
Beautiful. Yes, I would love to make an offer, which is we do analysis work, and a lot of times our analysis work, there is a fee. So anyone that wants to book a complimentary consultation with us, and it's a 15-20 minute complimentary consultation. The analysis work that we generally do for a fee, we would be willing to do that at no fee, assuming they met the metrics, right? It was a
Mhm.
reason to do it, right? Obviously, we have a quick conversation and it doesn't make sense to do an analysis. We won't, but if it is, we'd be happy to do a complimentary consultation and an analysis that really shows them, hey, if you did A, B, or C, this is what your economic value would be. So we love to do that. And just note, I always like to just pre-qualify. Generally speaking, once if someone's starting to pay 25, $30,000 or more in tax, that's really kind of our starting point. If they're paying less than that, there's some things that we could do to help them. That's usually once you start hitting that 25, and that's federal plus state,
Mhm.
25,000 or more. Obviously, the more you make, the easier it is for us to help them. But that's really kind of our starting point to really make it make sense to engage with us, so we can give them an impactful savings.
Mhm.
But we love to help anybody we can. It's just that I don't want to set an expectation that if the tax bill isn't quite that high yet, then maybe we won't be able to help you as much as you desire. I know that any amount's a lot. If you have to write 10 grand check or 15 grand, it's still a lot of money. I'd really rather keep it. But
Right.
again, it's we just run into issues in that, a lot of things that we do, you do have to spend money to save money. That
Mhm.
goes with taxes as well. So if we're not at the high enough tax brackets, then sometimes the spend doesn't beat the savings, right? But when we
Mhm.
start bumping into that 24 and 32 and 35 and 37% bracket, now we can start really working on the savings for them.
Right. So if they do want to touch base with you, how can they reach you?
I'd say the best thing to do is go to our website, which is taxwisepartners.com. And that's, taxwise partners, all one word.com. And wise is WISE. So that's what we are, strategic partners to you or your CPA or your registered investment advisor. But if they go to taxwisepartners.com, we have links that will help them, if they want to fill out some basic information and we can actually run the analysis off that. If they want to look at some case studies, they can do that, or they can literally just book a 15-20 minute appointment complimentary right there from the site. There's a appointment scheduler on there as well. So that's where the best place to find us.
Perfect. Well, thank you, Mark, for being a guest on my show and talking on this topic. I know it's so important for entrepreneurs to do what they can to save those tax dollars. And so I really appreciate the time you took to have this discussion today.
Yeah, thank you for inviting me. Thanks for the great questions and your hospitality.
You're welcome. And to the listener, if you enjoyed today's topic and you want to hear additional information, you can find access to exclusive content in the show notes. Thank you for tuning in today. Would you please share this episode with those you know and leave a review on your favorite platform? And if you find our show informative, would you consider being a financial sponsor to help me continue my mission to educate business owners? A link is located in the episode description, and no amount is too small. I'd really appreciate your support. If you are interested in connecting with our guests and receiving the offer they had to share, a link to our resource page is in the show notes. Finally, if you have any bookkeeping or payroll needs, reach out to us at 310-534-5577 or contact@abandp.com. My team and I are eager to assist you. Until next time, have a great day.
Thank you for listening to Biz Help for You. Please join your host, Candy Messer, again next time. Have a terrific day.